Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with EURUSD currency pair. Jakub Novak presents.
Today, you could buy the euro when the price reaches around 16.93, with a target of 1.1729. At 17.29, you could plan to exit the market and also open short positions in the opposite direction, expecting a move of 30-35 points from the entry. A rise in the euro today can only be expected if US data turns out to be very weak. Before buying, make sure that the MACD indicator is above the zero line and just starting to rise from it. You could also plan to buy the euro if there are two consecutive tests of 1.1679, while the MACD indicator is in an oversold area. This will limit the pair's downward potential and trigger a reversal upward. A rise toward 1693 and 1729 can be expected. You could plan to sell the euro today after the price reaches 1679. The target will be 1649, where you could plan to exit the market and open long positions in the opposite direction, expecting a 20-25 point move. Pressure on the pair will return if strong US data is released. Before selling, make sure that the MACD indicator is below the zero mark and just starting to decline from it. You could also plan to sell the euro if there are two consecutive price tests of 1.1693, while the MACD indicator is in an overbought zone. This will limit the pair's upward potential and lead to a downward reversal. A decline toward 1.1679 and 1649 can be expected.
And we're starting with pound sterling dollar pair with Tin Leo.
On the hourly chart, the GBPUSD pair on Friday made a third rebound from the resistance level 1.3437-3465, which again allows for expectations of a reversal in favor of the US dollar, and some decline toward the support level of 1.3341-3352. We could also note that the 3437-3465 represents the upper boundary of the sideways range 3177 and 3465. Thus, the pound has been moving horizontally for about a month and a half. The wave situation has once again shifted to a bullish outlook. The latest upper wave broke the previous peg, while the last completed downward wave did not break the previous low. Geopolitics had provided bears with almost full dominance in the market for 2 months. Then the geopolitical backdrop began to improve, which gave bulls more confidence. However, we can see that this is still not enough to break out of the sideways range between 3177 and 3465. On the 4-hour chart, the pair managed to break above the descending trend channel, but this has not yet given bulls any real advantage. The pound has risen to the resistance level of 3439-3482, but cannot break through it. Geopolitical has improved somewhat, but not enough for bears to leave the market. A breakout above 3482 would increase the likelihood of further growth toward the 1.3540 and 3664. No emergent divergences are currently observed on any indicators.
That's all for today. See you online soon.